Good afternoon, everybody. It is June 14th, Wednesday, 3:15 p.m. So an initial bullish reaction to the FOMC, and then the bears took over, and there have been very clear setups for these bear breaks, and I'll point them out. They are ascending, or I should say descending triangle patterns with a clear base of support, a lower high pattern, and then an all-out dump. And obviously here on the 5-minute time frame, the volume is very clearly indicating bearish action. So whenever we have high volatility, I will zoom into the 2-minute time frame to get more details of what's going on. And here on the 2-minute, we can see, let me zoom in here, but these two very similar patterns where we have our horizontal base of support. Initially, it was at 244.09, 244.10, 244.13, right on that level. Our bounce, our double bottom, our lower high, our bottom again at 244.12, lower high as soon as 244.09 breaks. Tons of stop losses are triggered. Volume pours in for the bears. And then from there, it's been nothing but downside. And then we formed another descending triangle pattern where we have our base 243.56, our bounce attempt, it's just another lower high in the overall pattern. We pull back again, 243.58, 2 cents higher, another lower high, and then a clear bear break again. These are the exact same patterns that just played out twice in a row, all bearish. So it is very clear right now that the tech sector is doing exactly what we anticipated it to do. And if you watch the nightly videos, I do the video on XLK, Apple, and Facebook every single night and pretty much set up this guideline as to what was anticipated to happen after all this volatility. And we're seeing that happen now. This dump right now is related to the tech sector. And let's look at the tech sector on these daily timeframes in just a moment. But right now on SPY, where we stand, well, let's go to the daily chart. So SPY ended up being a bear flag, rejecting from exponential resistance on the hourly, rejecting from the 20 period, and then another leg to the downside. So on the daily time frame here for SPY, we've got the sky is not falling by any means. We have a double top, absolutely, at the all-time high. But I do anticipate an ascending triangle to form where we have our horizontal base of resistance. We have our low of the initial pullback of 241.95. I would expect the bulls to show up tomorrow before 241.95 is broken. If that level breaks, we have a double top and then a lower low. It is a very clear break, and it gives the momentum to the bears in the short term. I would expect a higher low compared to 241.95, and then the range to continue to tighten before we get a clear break sometime next week. So obviously the bears have momentum at this point, but overall on the daily time frame, the bulls are just fine. And if we break 241.95, that will change sentiment in the short term. But as of right now, bulls in full control. So again, it's all dependent on the time frame. Obviously, the bears are in full control on the 5-minute, but on the daily time frame, this is not a big pullback whatsoever compared to the history of SPY when we're coming off the all-time high just a couple days ago. So we're on the verge of a bearish MACD cross. We are still trying to defend these exponential moving average supports, and this price is going to keep bouncing around as we are currently above the 8-period exponential. And we look at the weekly time frame for SPY, and really, there are no red flags at this point. There is yet again another potential bull flag on the weekly. So just want to get perspective. Absolutely, we are dumping today, and the bears have full control of the 5-minute time frame. But on the daily and the weekly time frame, we don't have red flags for the bulls yet. And we will be keeping a close eye for them, but not yet. So what we are anticipating to happen on this tech sector bounce is a lower high to be set. And we were using this middle Bollinger Band as our level. As soon as we got over the high of the bullish reversal candlestick from Monday, then we shifted our focus to the exponential resistances and the middle Bollinger Band resistances, looking for this lower high to be set. So look at all of these individual tech names. We have XLK with a very clear rejection, keeping the bears in full control. We've got Amazon with a very clear rejection, keeping the bears in control with a lower high being set. Google, the exact same thing, middle Bollinger Band daily resistance. Netflix, same thing, didn't even get to that level, much, much weaker. A triple top the past 3 days. Apple, much, much weaker, didn't even get to that level. Bear flag on Apple almost being confirmed. And Facebook has been the strongest of the tech sector, but it too is now losing the middle Bollinger Band after closing right on it yesterday. So that was our resistance level to be watching the past 2 days. The bulls did not pass the test by being able to close over that level. Our lower high has been set now. The top of the bounce, the bulls exhausted themselves from the lows back on Friday and Monday, and we are now looking to form an equilibrium pattern on the tech sector. And what that means is we are likely to form a higher low compared to the low of the dump on Monday. If we were to break that low without setting a higher low, that would obviously be a very clear bearish break, but I would anticipate the bulls to defend the support level 54.77 on XLK and for a higher low to form. And we look for this equilibrium pattern because it happens on all time frames, all over the place, and it comes after high volatility and wide ranges. And that's exactly what we got Friday and Monday. So now we have a lower high and we're looking for a higher low. And our major supports now on all of these names, losing the hourly 20-period moving average supports were red flags. Apple lost it right out of the gate this morning. But now we're looking at the lows of the dump. That is the important support level. That is all that we need to be watching if we are trading this tech sector and all these high beta names. It is the low of the dump either Friday or Monday, depending on the individual ticker. So bears are in control of the tech sector, but anticipating a higher low on the daily time frame. Checking in on these commodities, the dollar, bearish reaction to the news this morning, bullish reaction to the FOMC, and looking like the daily time frame with a bullish reversal candlestick, and trying to see a turnaround and a break of the lower high pattern, have to break 97.50 to do that. Gold has been all over the place, but it is ending up bearish, and the daily time frame is not confirming the bullish reversal candlestick from yesterday. Big upper wick of profit taking, heading down towards support, on the verge of losing the higher low pattern on gold. Bear miners are thriving right now. So bear miners is absolutely the play, and they have momentum, and gold is about to break down and lose this higher low pattern. Silver, same thing, absolutely falling apart, and silver on the daily time frame is also seeing no follow through and has already broken its higher low pattern. So the precious metals are really hurting, the bull miners are really hurting, and the dollar is close to turning around its trend to start to favor the bulls. Natural gas on the hourly time frame, bulls aren't doing anything. New resistance level being established at 2989. Trying to form a higher low here. We'll see a tightening range as we head into the inventory report tomorrow, but the bears are still in control of natural gas. Oil dumping. We lost the weekly uptrend support line last week. We back tested and rejected right from it this week, and now the daily time frame is confirming the bear flag. Drew this flag this morning, and the inventory report is the catalyst to another leg to the downside. The bears are taking over oil. Support is 43.79. Break that level, and it will be the lowest price that we have seen since November, since 7 months ago. So that is a very key support level as the bears have all this momentum heading to it. Cryptocurrencies, after its dump, is forming an equilibrium pattern. So really you can see that anything that humans trade form these equilibrium patterns. So the all-out dump, the high of the bounce, the higher low, the lower high, tightening ranges are forming on Ethereum. Bitcoin is doing the same thing, but a bit weaker than Ethereum. And Litecoin is in the middle of the road compared to both of those names. But watching those ranges, and we can look at it a bit more zoomed in on the 5-minute time frame, where we have our low of the dump, high of the bounce, higher lows, lower highs, very tight range. We should see a break from some hourly inside bars. Perhaps we'll see if this hourly candlestick does form an inside bar here with over a half hour to go. But that's what we would be watching for, a break of that equilibrium pattern that is currently forming. So let's look at some daily and weekly time frames here. As the bulls are trying to bounce, again, I am anticipating the tech sector to form a higher low compared to the lows of this dump, and this equilibrium pattern to play out a bit more into next week. So we have 2 trading days left this week, and watching to see if that support does hold. So we can be looking for the bulls to defend that support level. So let's start it off here. Need to scroll back, and we will start it with CL and Tesla. And again, if you guys can find the time to do it, these nightly videos that I put out every single night, last night at 11 p.m., putting out those videos, they really help with preparation, because none of this tech sector action should really be a surprise if following these videos nightly, as it has been fairly clearly laid out as to anticipating what to expect, the key levels to be watching, and some really nice opportunity as it has been played out as anticipated. So CL on the daily time frame, after the gap up opened, saw weakness and filled the gap, but we are still holding that middle Bollinger Band of 75.71. So the bulls are still in control on the daily time frame. It would require a loss of 75.06 and 75.08 to see a very clear bear break. So red flag number 1 will be a loss of the middle Bollinger Band, which is ascending very rapidly. So as long as the bulls hold that level, they are keeping up with a rapidly ascending support level. But if we do lose that, all about 75.08 and 75.06, a little bit of a double bottom at those levels. CL on the weekly time frame, this is a solid weak candlestick, a weekly candlestick, not a weak candlestick. It favors the bulls. So we had a bearish candlestick of profit taking last week. This is a candlestick currently, if we close right here, it's showing the bulls buying the dip, defending exponential support, and it even could be construed as a bull flag with 3 big weeks to the upside, normal healthy consolidation on declining volume, and then potentially continuation pattern. So as long as that daily middle Bollinger Band holds, which it is just barely at this point, but if we can hold that again tomorrow, the bulls certainly maintain control and looking to close strong on that weekly time frame, pretty much here or better, and the bulls are relieved. Tesla on the daily time frame, all-time high, rejecting from the upper Bollinger Band resistance. No red flags for Tesla at this point. Higher low established at 350.62. We have tons of wiggle room. The bulls are still in absolute full control here, and the weekly time frame is in breakout mode. So we could see further consolidation from here. Depends on what the market overall does. And again, at this point, SPY, like I keep saying, compared to the daily and the weekly chart, SPY is not really worried about much in terms of the bulls. We have the financial sector picking up the slack. XLF is at the high of the day right now and just barely going green while the tech sector is pulling back. So that's what we've been seeing with SPY all of 2017. Every time a sector is weak, some other sector steps it up and picks up the slack and keeps the market strong. And that's what we're seeing right now with money coming out of the tech sector, and it is going into other places. So Tesla on the daily time frame, just fine. Filling the gap to the downside at 376. It hasn't filled all the way yet. 376.31 is the low of the day. So there is a little gap at 376. There's another little gap at 364.50. And all exponential moving averages are support. So nothing to worry about. It is a little bearish candlestick showing the bulls may be tiring after 2 gap ups in a row. But as we know, Tesla is a very strong bull. And on consolidation, we will look for a higher low to form compared to 350.62. I'll get back to those 5-minute charts in just a bit. Going to stick to the daily and weekly for now. So looking at Facebook and some of these tech names, Facebook again, very clearly the strongest name in the tech sector because we did turn that middle Bollinger Band into support yesterday. We are losing that level. The low of yesterday is still holding 148.90. Our lower high has been set now. 152.40 is our lower high, and we're going to look to consolidate and form a higher low compared to 144.56. So equilibrium pattern forming on the daily time frame as anticipated for these tech names, and we will look for a higher low, if not at 148.90 support. The 50-day moving average support will come next, and that's going to be just over 148 tomorrow. Weekly time frame, the bulls are trying to keep the 8-period exponential support, which has held the entire year. If we lose that level, it will be the first red flag on this weekly time frame, and we can see this base of support right now down at 144.42, 144.56. Lose those levels on the weekly time frame, and momentum will shift, and the bears will start to take over the weekly trend for the short term. We have a bearish MACD cross closing in, so that's the key support level for the longer-term bulls to be watching. And in terms of the daily chart, watch for that higher low to form either tomorrow or Friday. I will anticipate our higher low to be set in this tech sector. BAC. So here is a higher low forming where we saw a bull break of the lower high pattern. We rejected from the upper Bollinger Band resistance. We pulled back. Bulls bought the dip today, so our higher low is now 23.20, but the Bollinger Bands are in the way here. They need to level out and ascend and create room to the upside. The range to be watching on BAC right now is 23.20 support and 24.11 resistance, and we will likely stay within this range for the rest of the week, I would assume. And if we don't, then that will give us a clear direction and momentum heading into next week. But the bulls are buying the dip, obviously, and they are responding well to this FOMC as they are at the high of the day as I currently speak. And their bounce right now is helping SPY recover off the lows. Want to look at SPY 5-minute real quick. So it's a little bit of a bounce here on SPY. Resistance is going to be 243.97, the high of the last bounce attempt before continuation to the downside. And it is all financial sector right now helping these bulls try and piece things together. So bulls have momentum here, and we'll see if we test this upper Bollinger Band resistance again, which is going to be just under 24 tomorrow as well. Bulls want to hold the middle Bollinger Band on the weekly on a back test, 23.56. So far, so good. And it's all about that daily time frame and this new higher low of support that's established of 23.20. Bulls want to hold that level for the next week in order to be their strongest. So WDC was acting like a lot of these other tech sector names in terms of the bounce attempt, lower high being set, and now pulling back and anticipating a higher low. Equilibrium pattern. There's a gap to fill at 86.72, and the bears have momentum, but I do fully anticipate a higher low to be formed compared to 82.14. And the range will tighten up as we head into next week. Bulls are still holding the middle Bollinger Band on the weekly, still just fine overall. 82.75 is that support. No red flags for the longer-term bulls, and we won't have a red flag on this daily time frame unless we break the low of the dump. Same story as every single tech sector name. The low of the dump is the must-hold support level for here on out. If we lose that low of the dump level, momentum is going to shift on the weekly time frames in a way that we have not seen in 2017. CVX pulling back, filling the gap to the downside, and after that gap up, this is why we remain patient, and we can be scouting for a bull entry here and a higher low to form, and that is because we broke this lower high pattern on the daily. So as soon as you break the lower high pattern, you anticipate higher lows and then potential continuation of higher highs, and the bulls are defending the 200-day moving average of 106.34. Weekly time frame is still rejecting from the middle Bollinger Band and trying to hold the 50-week support on a back test of 105.35. So you could either wait for the weekly time frame to close above the middle Bollinger Band if you want to be a little bit more confident that the bulls are turning this trend around, or we can be watching to see if the bulls defend this 200-day moving average support today, and if they defend it again tomorrow, that will increase the odds that this higher low of 105.74 is set for the time being. NVDA. So NVDA is just fine for the bulls as well. Inside bar on the daily time frame. That's going to give us a nice signal tomorrow to be watching. Middle Bollinger Band support holding. Exponential support still there. So bulls have nothing to worry about here, and we'll be watching for that break. If we break the low of today tomorrow, we're looking down at the low of the pullback of 142.11. And if we break the inside bar to the upside of 154.06, we're looking right back at the all-time high. So that's going to be a nice short-term indication. We are rejecting from the weekly upper Bollinger Band of 151.82. So worth watching that as well. But this inside bar tomorrow is going to be a really nice play for the semiconductor sector. And let's see if these other names have any inside bars as well. And even if they don't, MU does. And AMD is right on the verge. Maybe a bear break here, but there's AMD acting like the weakest in the sector yet again. Inside bars on NVDA and MU to be watching for the sector tomorrow. Although MU is close to a bear break as well. You can clearly see if you want to be playing the sector bullish, you want to be playing NVDA. JD. So here we go with a bear break on JD. So this is much closer to a significant bear break because the bounce was much weaker. It's a bear flag on the daily time frame, rejecting from exponential resistance. We're closing at the low of the day on increasing bear volume. And if we break 37.98 tomorrow, it's a lower high and a lower low and a shift of the trend. The trend will change if that does play out. So this is a bit of a more bearish reaction where we didn't see a significant bounce, so we're much closer to breaking support. And here on the weekly time frame, this consolidation is still healthy overall, but if we do see this break to lower lows, we're going to be looking for this gap to fill at 35.90, and on the weekly time frame, that gap is there as well. So conscious of that gap, and considering we've given a month of pullback and only given back one of these bullish candlesticks on the way up, we could still pull back significantly. I mean, the middle Bollinger Band on the weekly is down over 10% below where we currently stand. So we shot to the upside, and we're still seeing healthy consolidation at this point, considering the significance of the move that we saw in 2017 here, where we almost went 100%. So all about the support low of Monday, and if we break it, the gap fill will be the next target. So X, here's another one where just the daily videos, it could not have been laid out more clearly in terms of the clear signal that the bears were going to be looking for and that the bulls were going to be looking for to exit any positions. So the first red flag was the upper wicks of profit taking 2 days in a row. And I believe it was live yesterday where I said the bulls are still holding the higher lows. So the bulls have to be pleased with how things are going by being able to maintain those higher lows even after these upper wicks. But the lows of the past 2 days, 21.72 and 21.75, it was very clear that if we broke those levels, we were going to pull back. I believe I said 21 would be tested, and obviously we blew right through that level with a 6% down day. But very clear that significant downside would be coming if we lost that higher low pattern due to the upper wicks of profit taking preceding that break. So as soon as we broke that level and it was right at the open, that was the bear signal, and then we all out dumped, and here we are at the middle Bollinger Band of 2055. So knowing that the weekly time frame is a potential bear flag because it's still a weak bounce, and we know the bears have been in control for months, and we are rejecting from exponential weekly resistance, so knowing that that is a potential bear flag, we need to be very cautious on the daily time frame. Sure, we're in an uptrend over the past few weeks with higher lows and higher highs on this oversold bounce, but looking at the weekly lets us know that we could very easily fall back and break 1855 and see continuation to the downside. So as soon as we broke 2172 and 2175, that was the indication that we were going to pull back and try and establish a higher low, which we still are doing on the daily time frame, but knowing that it was going to be a 3 to 5% pullback before that higher low. I believe I anticipated 21, which was a 3.5% pullback. That was a clear exit signal and a clear bearish signal right at the open today. So Baidu and Baba are seeing weakness. Let's see if Baba is breaking down into that gap fill yet. And not just yet, but that's going to be a very clear bear break on Baba. Break 135.21, and we start to fill the gap. Keep an eye on Baba for that bear break. Baidu. So Baidu has been rejecting from exponential daily resistance time and time again. We've been trying to defend this 100-day moving average support time and time again, and we are losing it today. So we are looking now down at our must-hold level of 174.77, and if we lose that level, we lose the uptrend in the short term. The weekly time frame is no longer keeping this middle Bollinger Band as support, so the bulls want to recover by the end of this week to close above 178.83 to keep that weekly middle Bollinger Band as support. But as of right now, this daily chart is all bears. The only thing that the bears have going for them over the past week is its declining bear volume. That tells us that the bears are exhausting themselves to the downside and that the bulls should show up in the near term. But as of right now, there is no sign of them. Bulls must hold 174.77. This can be a potential bottom fishing play off of that support level. If we were to drop down to, say, 175.50 in the near term, we could use that level as our stop trigger, as the Baidu hourly chart right now has an RSI of 36. So if we were to drop down tomorrow, first thing, and see, $1.50, $2 to downside, the hourly RSI will get oversold, and we will have that stop loss level to be playing off of 174.77 support. But as of right now, bears in full control. SHOP. So SPY bounce is significant at this point off of the low, up 60 cents. SHOP also was an extremely weak bounce attempt, and we saw no follow through yesterday, rejection from exponential resistances, and if bulls on any time frame, if bulls cannot get over exponential resistances, we know the bears are still in full control. 5-minute, hourly, daily, whatever time frame you're looking at is going to dictate the time frame of your trade. But that is a very clear signal of a lack of any follow-through. So support is down at 84.48. We did break that just barely. 50-day is 83.77, and same thing. If we break the low of the dump of 82.51, it will be a shift in momentum and a shift in this trend. And the weekly time frame will break the higher low pattern. So $81 is a key support level, and if that breaks, we're going to see a bearish MACD cross and a bearish TCG cross, and the middle Bollinger Band on the weekly will be the next level. So the trend is close to shifting here and close to changing. The bulls really need to show up and defend those lows, 81 most notably, but 82.51 as well. I would be going off of 81 for the trend change on SHOP. As long as 81 holds, the bulls do cling to that support. Break 81 and the trend is changing. Couple more, then I'll switch to the 5-minute. PCLN. So PCLN was another one that was a weak rejection on this bounce attempt, rejecting right off the exponential and middle Bollinger Band 2 days in a row, almost a double top with the high of yesterday, and then falling back. So we're going to look for a higher low to form compared to 1781. 1800 is a psychological support to keep an eye on, but watching for this equilibrium pattern. Tons of volume, volatility, and range. So we have our lower high now set, and now we're looking for a higher low. If we were to break 1781 without setting a higher low, it would be a very bearish break. Also watching PCLN here for a shift on the weekly chart for the first time in 2017. Risk of losing the 8-period exponential, bearish MACD cross, bearish TCG cross, and losing the higher low pattern. A shift in momentum here. We now have a lower high and lower low on PCLN, and watching to see if we get this break of 1781, the weekly longer term chart will shift. It's very strong uptrend from all of 2017. NTES. We are absolutely seeing sector rotation. There is no doubt about it. The way that SPY is able to hold up here with the tech sector, which is the largest holding in the S&P 500, pulling back that significantly, and SPY holding on just fine. Let's look at this daily chart for SPY now that it's updated. Lower wick, exponential support, no red flags whatsoever for these bulls. Double top to be aware of, absolutely, but here's our higher low ascending triangle pattern forming. NTES. So losing the low of 296.50 was a red flag for the short-term bulls. We now have a bearish MACD cross. If we lose this middle Bollinger Band, we're looking down at the next support of 282.25. So we had the pullback, our low established, our bounce attempt, our lower high set, and now our lower low with continuation to the downside. Weekly time frame rejecting from the upper Bollinger Band resistance 2 weeks in a row. Very key middle Bollinger Band weekly support, which will be in the mid 280s next week, and looks like we may test that level as well. So I will be looking to the mid 280s, which will line up with this higher low on the daily of 282.25, but the bearish short-term follow-through by breaking that low of Monday. And that's the same for every individual ticker. Break the low of Monday, and the bears take short-term control of the daily chart. So Yelp here, rejecting from the upper Bollinger Band 4 days in a row, very clearly keeping a cap on things. We're filling the gap to the upside. It's just slow and steady because we're patiently waiting for this upper Bollinger Band to continue ascending. Bulls need to keep forming higher lows. Most recently, it was 29.09. Bulls not really convincingly forming a higher low now because we are closing near the low of the day. Exponential support is still holding, however. Weekly time frame is still a weak bounce. Bulls want to close this week over 30.37 to turn that 8-period exponential moving average into support, so it is no longer at risk of being a bear flag. But that upper Bollinger Band on the daily, still a bit of a buzzkill for these bulls that are trying to fill this gap. So we may see further downside on Yelp just because we don't have much lower wick here on the daily time frame. Tomorrow will be very telling to see if the bulls buy a dip and form a nice lower wick and give us a convincing higher low compared to 29.09. All right, let's look at the 5-minute chart real quick. So let's see what this SPY bounce looks like. So that's a significant SPY bounce. There is volume behind that. And right now, in terms of the hourly time frame for SPY, that's something to be watching. Right off the hourly 100-period support, when did bulls hold that? They held that at the low of yesterday. So holding it 2 candlesticks in a row again. And the range today has been dictated by rejections from the 20-period hourly and now bounces off the 100-period hourly support. So that's a nice little channel to be watching as we head into tomorrow to give us some indication of short-term direction. So 5-min on GOOG. Very clear break of the higher low pattern on this 5-minute time frame. So an initial dump, then we had a lower high, higher low, lower high, higher low, equilibrium pattern all through the morning with a bull break as soon as 9:59 broke. That was a bull break. Saw a move up to 960.75, and then we had another equilibrium pattern again where we had our consolidation of low, which was another higher low on the 5-minute time frame, had not broken the higher low pattern yet. Lower high, lower low. That's when momentum shifted. Then another lower high. And this was a fake out right here where the initial reaction to the FOMC was bullish for some names, and we did actually get a new high of the day on Google. That ended up being a fake out, but the bears absolutely took over, and it was clear that the bears were taking over once these lows broke. So we had 957.53, 957.51, and 957.57. So it's the same thing here where we had a descending triangle pattern with a horizontal base of support. And besides those two candlesticks, which were the fake out, screwing up the descending triangle pattern with a clear horizontal base of support, a triple low in the 957.50s. As soon as those broke, that's when the bears really took over. And the bounce that's occurring right now, we're going to be watching on all these tech names. We were watching for the loss of the 20-period moving average support to indicate that the top of the bounce had been set on the daily time frame. And now we're going to be watching to see if we backtest and reject from these 20-period hourly resistances. So the hourly chart is going to be just as important as it has been for the past 2 days for these tech names. If they backtest and reject from hourly 20-period moving average resistance, the bears maintain full control, and this short-term bounce will show weakness. So Amazon on the hourly, same thing. Losing the hourly 20 period, indication that the top of the bounce is in after it held the low of yesterday. And now we'll be watching for a back test and a rejection from that level. 5-minute time frame for Amazon. We had an uptrend for the bulls with higher lows until we broke either you could have used 984.62 or 983.50 for that bear break, and then momentum shifted and it was lower highs for the rest of the day. Again, a little 10-minute fake out with the initial reaction to the FOMC before an all-out dump. And this bounce right now is just cooling off 5-minute RSI levels. It's all about hourly 20-period moving average resistances on these tech names. That is the moving average to be watching tomorrow. So now we will go to NEM. Just fixing my other screen here so I can keep an eye on things. So after all that, SPY is down 0.2%. So NEM on the daily time frame, very bearish break of the low of Monday. We now have a lower high and a lower low. So that is shifting momentum on this daily time frame. The 50-day moving average support potentially being lost at 33.79. Next support is down at 33.50 and then 32.67. Bearish MACD cross, bearish TCG cross, weekly time frame upper wicks. Look at this middle Bollinger Band resistance. We got well over that last week before a rejection and could not close above that level. And actually we closed above it by 2 pennies, obviously not convincing with that big upper wick. But we have rejected from this middle Bollinger Band weekly resistance 4 of the last 5 weeks. So NEM looked just fine, holding the middle Bollinger Band on this bounce, trying to see some follow through. But as soon as we broke the low of Monday, that completely shifts things as it's now a lower high and a lower low. So the bears clearly have a lot of momentum now. We'll see if we get continuation to the downside. And we were on the verge of a bull break, but could not see the bulls hold support with this bearish reaction to the FOMC. So definitely a bit tricky by breaking some resistance levels last week. And today really ruined a lot of bullish progress that NEM had established. So comparing XLK to these individual names, and it's a little bit tricky because Amazon's low. Well, you need to look at it in terms of percentages, really, if you're going to compare them. So the low here, 54.77. The low of today, 55.35. So we're talking 58 cents there out of, that's about just over a 1% move. And you compare it to Amazon. Well, actually, you don't want to compare it to Amazon because the low of Amazon was that little flash crash. So that's almost a little fluke there. I like Google better for this example that I'm looking at. So the low of 9.37 we'll round it to, and then today was 9.60, so that's a $23 difference, and 23 out of 900. Let's see, that is, technically speaking, Google is a lot closer to the low percentage-wise than XLK is. So visually, it might not look that way, but it's percentages we need to compare. And because of the differences in the price, obviously a $900 stock, so $23 out of $900 stock is about under 0.3%, really. I think. I'm just doing that on the fly in my head, so that might be wrong. But compare the percentages. And definitely worth watching both. If you're playing the individual name, obviously the individual name is more important, but definitely want to be checking in on what the overall sector is doing as well. Because we have a clear spectrum now laid out. We can rank all of these tech names that we follow in terms of strength to weakness because we've been watching how they compare to each other this entire pullback, and this dump has really separated them in terms of bulls to bears. So if I had to rank them right now of what we follow, it would be Apple is the weakest, Netflix is the second weakest, then I would put, and Google and Amazon are a little tricky again because of that Amazon flash crash, but I'd put Amazon and Google tied for the middle right there, and then I would put Facebook in the lead for strength. And that's how I would rank them all. And right now we've got Apple down 1%, leading the way to the downside, and it was very clearly the weakest bounce attempt where we couldn't even get over the daily lower Bollinger Band. We didn't even close over that level. So very clear weakness in Apple and Netflix. Those are the names that I would be taking bearish on a lower high being set in this sector. They are much closer to breaking their lows of Monday than the stronger names. You look at Facebook compared to the low of Monday, and we are well above that level. So it is very important to distinguish within a sector who is most bullish and who is most bearish. SPWR, very, very tight. This is going to be a nice pattern break sometime by the end of this week, most likely. If not, certainly Monday or Tuesday. But we're getting very, very tight. And you can see we don't even need an uptrend line because we have our middle Bollinger Band here. But I'm looking at resistance of 820, 825, and 836. And the uptrend support line is going to continue ascending. If we close below the uptrend support line of the middle Bollinger Band, that is a red flag for the bulls. But it is a bit of a ascending triangle pattern where we could put our horizontal resistance right at about 830. It really all depends on how much what you want your risk to reward to be. So if you want more risk and more reward, you're entering bullish on an 820 break. If you want to limit that a little bit, you're waiting for an 825 break, or if you want to be extra cautious, you're waiting on an 836 break. And if you're looking to go bearish, you're looking for a loss of the middle Bollinger Band, or you're looking a loss of 789. It's just a very tight pattern, and depending on which level you go back to look at is going to determine the amount of risk to reward you take on this trade. So there's going to be a very clear break here in the near-term future. I really like this setup, and it still favors the bulls, absolutely. That's a bullish consolidation pattern after a little uptrend that we've been seeing here. Weekly chart looks like a bull flag holding exponential support. So definitely worth watching SPWR the next 2 days. SPY bounce is continuing down 0.17%. That's nothing. Amazon. So our lower high is now established on Amazon, rejecting from the middle Bollinger Band daily resistance 2 days in a row. We held the low of yesterday. So that's another way we can distinguish these individual names, who held the low of yesterday and who did not. So Amazon is holding the low of yesterday. Facebook is holding the low of yesterday, just barely. Apple is obviously not. Let's see if Netflix is. Netflix is just barely, almost the same range as yesterday. And Google just barely broke it. So that would be another distinguishing factor. The names that have held the low of yesterday have another support level before we head down towards the low of Monday. So Amazon is holding that low of yesterday. That's a support level to be watching. Bulls buying the dip a bit here with this lower wick. It's not an all-out collapse. It was a setback and a pullback. And if you are bearish on these tech names, need to see a break of that low of Monday to be heading back down towards that low, or excuse me, you need to see a break of the low of Tuesday to be heading back down to the lows of Monday. So Amazon is in the middle of the road in terms, and just that fact alone, I just said Google and Amazon are the same, but Google broke its low of yesterday just barely. So that alone would be enough for me to put Amazon ahead of Google in the strength category. Interesting. I got all my settings are the exact same as always. Might be on YouTube's end, but I've got no dropped frames, no lag, no nothing. Sorry to hear. So let's go to Baba. So again, Baba is all about 135.21 support. Break that level and it is a bearish indication of an entry, and we are right on the verge of that. Although I would be aware of what the hourly RSI is when that break does occur. And right now the hourly RSI is 40, so there's plenty of room to the downside. The bulls are defending the hourly 100 period, break that level, and we likely break that low. So that's another example where if we lose the hourly 100 period and you want more risk to reward in your trade, you would make a bearish entry there and then just anticipate that we're going to break 135.21. And that 100-hour moving average support is 136.19, so it could even give us a 75-cent little head start on that bear break. And we are currently defending it here at the end of the day. SPY is almost going green, but breaking that 100-hour moving average support will be the first bearish signal, and then we're looking down at 135.21. At this point, the bulls are really just trying to defend those levels, and we're close to a bear break on Baba. JDST. So JDST thriving today on weakness, gap down open for buying, and the bulls running with it, breaking the high of the last bounce attempt. Resistance is moving average. There's a gap to fill here, actually. Let's look at 75.75 as a gap to fill. And the bulls have a lot of momentum here, trying to break the lower high pattern on the daily time frame. That being said, the hourly RSI at this point, let's update JDST. We're up at 70, so not too bad. I would be watching hourly moving averages. Due to all the volatility on this daily time frame recently, hourly resistance 72.23, hourly support is 64.84. Still a wide range in between there, but daily levels not really very useful where we currently stand. 72.70 is a resistance. We pulled back from 71.72. I'd be using the hourly time frame for JDST and just one hourly moving average resistance to get over before we have all hourly moving averages as support. LABU, bulls in full control, rejecting from the upper Bollinger Band. Every time we test this upper Bollinger Band the past 2 weeks, we reject from it. Third rejection in the past 2 weeks, but the bulls are in full control. We just broke to 52-week highs on the biotech sector. LABU bulls are in full control. And actually, I take that back. Because of the time decay on LABU, we have not broken to 52-week highs. 55.88, 55.20, and 55... make that 54.21, so clear lower highs on LABU, but you compare that to XBI, and XBI is just fine for these bulls hitting 52-week highs. So that is a very clear example of leveraged ETFs with time decay, making the charts look different than the underlying XBI sector, which is all bull. So there's resistance levels here on LABU that we don't have on XBI. XBI is rejecting from weekly upper Bollinger Band resistance. We have rejected from this upper Bollinger Band resistance the last 4 times we have tested that level in the past 7-8 months. So odds are we reject from it, but the bulls are in full control, and we will look to maintain weekly middle Bollinger Band support. Just need to wait for those Bollinger Bands to level out and begin ascending. So SPY bulls have recovered significantly here. We have a solid lower wick at the end of the day. And the amount of the bounce that we've seen on this tech sector. Let's see what these candlesticks look like at the close. SPY holding exponential support just fine. We are less than $1. We are currently 75 cents from an all-time high. And that is about 0.3%. So all about perspective. Daily or the 5-minute chart looked like a disaster. The daily chart, not at all. XLK, we might have just set our higher low. That could have been our higher low. Because of the magnitude of the bounce we've seen off this level from the low of the day, we have our all-time high, low of the dump, lower high is the high of today. That might be our higher low. So the range of today going into the rest of the week is going to be very important. And I'll go over all that in the nightly tech sector video. So thanks again, everybody, for tuning in. Lots of action today in this tech sector. The tech sector is where the volatility is at. So if you are a day trader, obviously the bull miners had a lot of action as well. But if you're a day trader, you are all over this tech sector because the opportunity there, and the financial sector has it as well. But those two sectors, well, we got semiconductors with the volatility as well. So there's opportunity everywhere. But I'm really digging this tech sector setup because of how clear this equilibrium pattern is. So thanks, everybody. I hope you have a good rest of your day. And I'll double check everything on my end. But everything looks clear and normal as usual. So it does seem like it is YouTube's issue. And I will see you all tomorrow.